Good afternoon, everyone, and thank you for joining us today. I'm Michael Cummins. I manage our Treasury Solutions business here at Citizens. I'll be your host today and moderator for the next hour as we walk through the 2024 payments trends results. We're excited to be here today and talk through the results of our third annual payments trends survey and have a discussion about what we are seeing in the market from a standpoint of payment technology adoption. I'm going to let my esteemed panelists introduce themselves in a minute, and then we will talk about the findings in the report, including the evolving payments mix, where companies are turning for payment capabilities, digital payment adoptions, and actions for your companies to consider. We'll have time for Q&A at the end, so please chat. I think you can see the chat in the lower right-hand corner of your screen. Any questions that you want any of the panelists to answer, we'd be happy to do that at the end of the discussion. So I'm joined today by an esteemed panel of payments experts. We've got three folks, including myself, from Citizens. We are the payment gurus here at Citizens. Unfortunately, I drew the short end of the stick, or the small stick, so I'm the moderator today. And then one of our key partners is also joining us today, Maria Loisi from MasterCard, and I'll give them just a couple minutes to introduce themselves. Why don't we start with Matt?
Great, thank you, Mike, and thank you everybody on who has joined today. I'm Matt Richardson. I run the product management, product development group for the Treasury Solutions business. And really what that means is we look after the commercial payment functionality within Citizens, helping our customers move money in, move money out. And our role is to maintain, improve, and build new products for our commercial customers. I have been at Citizens for 25 years, almost all of that in the payment space, and have had a great time here at Citizens building and expanding our payments products. On to Tyra.
Thanks, Matt. Everyone, it's so great to be with you today. I'm thrilled to be part of the panel and talk about the payment trends for 2024. Just by way of background, I joined Citizens less than a year ago, really with the remit of looking at enterprise payments, which means how are we thinking about our core payment rails holistically across the bank? And how are we thinking about new use cases, new distribution channels, and the evolving needs of our customer set? I have the privilege of partnering with Mike and Matt very closely on commercial and wholesale. My background has been over 20 years in payments, most of that B2B. I started at Citi, where we were really looking at how do we expand global B2B payments, different markets and sort of permutations around the capabilities that Citi was delivering out into the market, as well as forging new partnerships. I then went on to Visa, which enabled me to kind of see the network side. And so thinking about how the commercial tools and capabilities, as well as verticals, which Marie will talk about shortly from the MasterCard perspective, were able to really come into play as Visa was driving adoption around commercial issuers. And then finally, most recently at FIS, really looking at the processor ecosystem and this narrative around how do companies increasingly think about themselves as platforms and really embedding new forms of payment and banking into their customer segments. So great to be here today. Thank you again for the time. Marie, I will hand it over to you.
Thanks, Tara. I'm Maria Loisi, and I head up MasterCard's commercial business in the United States. It's all things and everything having to do with commercial business, from payments to products, to go-to-market, to marketing, business development, and very importantly, commercial acceptance. I also lead our healthcare business, which is the consumer-directed healthcare, HSA and FSA. We also have a B2B portion of the healthcare business, the payer provider, and we also launched a whole series of services to help health systems better manage their business, like revenue cycle management. I've been in the business of payments 25 years. I started my career at American Express, really focused on the consumer end of payments. And then I joined MasterCard and I started my career on the commercial side of payments. I'm thrilled to be here today. Thank you so much.
Thanks, Matt, Tara, and Marie. As you can see, we have a wealth of knowledge around payments on this panel. So at the end, I would encourage you all to ask questions, maybe not only about this survey, but just in general, if you have some questions on payments, because we have the right group of folks here to answer it. So for the third year in a row, Citizens has interviewed 200 CEOs, CFOs, and treasurers at mid-sized companies to understand how payment processes are evolving in their organizations. Consistent with 2023 results, our 2024 payments trend survey showed that middle market companies rely on a mix of digital and traditional payment methods. Tyra, can you talk a little bit about the current payment landscape for companies and where we're seeing changes in terms of payment utilization?
Yeah, Mike, happy to. So I think, just to set the context more broadly, there was research that was done last year by payments.com that really showed that in spite of an ongoing shift towards electronic and digital transactions, 62% of businesses were still using legacy methods to pay for commercial goods and services. And what our survey results sort of highlighted was a couple of key things. I mean, one, there's still a really strong indication in market that our customers want faster, seamless, and more digitized payments. And so if you look at sort of the right side, on the average number of payment methods used, we saw somewhat of a consolidation moving from 5 to 4.4 this year. But really, when you look at sort of the usage and the intent around it, there were noticeable increases. So areas such as B2C payment alternatives and the rise of instant payments was something that we're hearing from our customer base and reflected in the survey results. And a lot of that we think is commensurate with some of the significant innovation being driven on top of new areas such as instant payment rails and new use cases, right? We're seeing that in areas like account to account, in thinking about gig economy, payroll, and certainly in B2C disbursements too. While at the same time, if you look more toward the middle, when we looked at cards, you saw a slight increase in physical credit card usage, as well as an increase in virtual cards. And what we're seeing across the ecosystem there, particularly for our commercial customers, are this continued movement toward a digitizing end-to-end accounts payable, accounts receivable, and new areas around expense management and spend management. So cards are really becoming more embedded into those ecosystems in which customer needs are being served. And I think there's some really innovative use cases, particularly on the virtual card side, that Marie will touch on in a little bit from her vantage point at MasterCard. And perhaps not surprisingly, we still see that the prevalence of traditional payment methods. And so while wires have gone down, and you'll notice that decreased to 40% from where it was at 64%, checks continue to stay very much in the mix. And so as a bank, and as we think about from an ecosystem perspective, continuing to sort of chip away at that check spend and the controls and sort of the existing processes that support it, it really opens up continued opportunities for all of us as we think about kind of that move to digital and how do we sufficiently still support many of the things that people like and rely on from a check-based perspective. So Matt, maybe I'll turn it over to you to talk a bit about how our customers are sort of seeing these payment methods on the rise.
Absolutely. Thanks, Tyra. I think the way clients are looking at this is the speed to payment, as Tyra mentioned, is incredibly important. And that sort of that shows in the graph in terms of what's leading where our customers want to go. The B2C payment alternatives being able to pay out to channels that consumers or people, individuals, prefer to be paid out to with that perceived speed of payment are incredibly important. Our customers, certainly in any sort of B2C transaction environment, want to meet their customers where they want to be. So that having that optionality and having those alternatives is very important. And then just the speed of both RTP and FedNow, and I would also lump in same day ACH to that, giving that increased feel of the payments moving faster.
So Matt and Tyra, just curiosity, the wire payments is, as Tyra mentioned, is the only one that is showing sort of a downward trajectory year over year. Is that because the other payment methods are speeding up in terms of same-day settlement, and wire transfers have historically been a little bit more pricey? And so to both your, I think I'm answering my own question as I'm asking the question, but you know, if you can get same-day settlement at a much cheaper price, why wouldn't you, right? Is that why we're seeing wire transfer volumes go down?
I would certainly think that's part of it, Mike. The idea that you can definitely move money on a same day basis now outside of wire transfer, whether it's ACH, which as we know has a much different cost point than wire does, or real time payments or FedNow that have many of the same characteristics of wire, including and probably most importantly, finality of settlement, has created viable alternatives where, you know, going back 5+ years, viable alternatives did not really exist. So I think that would be a big part of it.
Yeah, and Mike, I might just add to Matt's, I agree with everything Matt said. I mean, I think you also see on the average number of payment methods used, I do think there's a movement to sort of consolidation and almost this view of sort of intelligence. And what I mean by that is, you know, customers increasingly wanting to come in to their bank, you know, to their third-party payment provider and understand that I'm trying to achieve a certain outcome. There's a speed of payment, there's a cost of the payment, there is value in the data and the reconciliation that ties to the payment, and they're really looking for their banks in particular to be much more consultative in how they operate in that space. And so I think you know we'll continue to sort of see this value equation that has to be assessed as people think about what's the optimal payment channel and payment mix for them going forward.
All great. Thank you both. Marie, as Tyra mentioned, we're also seeing an increase in virtual card usage. Be curious as to your perspective from MasterCard on that trend.
Sure. So we have seen consistent growth with virtual cards from its inception. In fact, we have continually seen double-digit growth. And the growth factors that are driving virtual card are very consistent with the themes that we're hearing as part of the survey. We're hearing a lot about digitization, and virtual card is a digitized payment. We're hearing about optimizing payments. If you think about virtual card, it is an optimized payment. If you look at the macroeconomic conditions today, interest rates are very high. VCN is a working capital tool. It could also be a revenue generator with rebates. And Tyra talked about data. Reconciliation data is very, very important. There's a lot of data that comes along with virtual cards. And one of the other things that we heard through the survey is about safety and security, payments fraud. Virtual card is probably, in my opinion, one of the safest or most controlled payment modality. There's more than 20 plus controls associated with a virtual card. So there's no surprise here that the survey is uncovering that there's an intention to use more virtual cards as a payment modality going forward.
I would agree with that, Maria. Thanks for that, Marie. Thanks for that. Let's move to slide 6. Matt, this year's survey showed that companies are continuing to adopt instant payment methods, which wasn't always the case. Over the last year, the space has gotten a little bit more robust with FedNow joining R2P as another instant payment rail. Could you talk a little bit about what we're seeing in the instant payment space?
Yes. So we touched on it a little bit in slide 5, but I think it might be helpful just to give a little bit of a primer on what do we mean when we talk about instant payments. So real-time payments and FedNow, real-time payments is a privately operated system run by the clearinghouse, and FedNow is the government's version of a very similar of real-time payments, very similar to real-time payments. So they share key attributes, which are important to understand. They are both 24/7, 365, meaning they're always on and money is always moving. It's very different from how the payment landscape in the United States has always traditionally worked outside of card. The ACH, wire, checks, they were always sort of on bank hours. Um, they do have, and then the other part that I mentioned that's very important is that they do have finality of payment. So typically only wire transfer in the past had that feature, which was very important if you're doing a large transaction, like say closing on a house. You might want to know that the funds have moved with finality, and both RTP and FedNow enjoy that. So they are net new payment rails. They're not in any way riding on existing rails like ACH or wire or card. They're net new. So a little bit of history here. As we mentioned, FedNow went live in the summer of 2023, so it's relatively new to the game. Real-time payments went live in 2017. So that sort of 6-year head start for RTP has led to RTP having dramatically more reach than FedNow. So as our customers and as corporates who are making payments evaluate their options, the main thing that they should be looking for, all other features being equal, is how much reach does the payment type have? How many of my trading partners can I get to via this payment method? And right now, RTP owns a significant advantage over FedNow with the ability to reach 67% of checking accounts in the United States versus FedNow in the 22 to 23% range. So FedNow will almost certainly catch up, but right now RTP enjoys a significant advantage. So, and one other thing that's important to note, unlike most other areas in the world, the United States did not mandate an instant payments scheme. So this growth that RTP has seen over the past 6 years and FedNow has seen over the past year is entirely voluntary. No one's required to join these schemes, but people do see the value, institutions see the value, corporates see the value, so they are really starting to flock to these schemes. And I did see a question that came up in the chat, and I thought it was a good one to address on this slide. When we talk about faster payments, folks on listening to the call might be thinking, hey, I don't want to pay faster. I want to manage my cash flow. And the way to think about real-time payments or FedNow is it really gives you precision of payment. So it doesn't mean you should pay sooner. It means you can effectively pay at the very last moment and be assured that that payment will get there. You don't have that same precision with a check, obviously, and you don't even quite have it as much with ACH. But with RTP and with FedNow, you do. So that's really the sort of the biggest selling point of these is not that you want to pay right away, but you can control within seconds when you pay.
Great. Thank you, Matt. We know that the payment landscape is increasingly complex, and companies have options in who to turn to when it comes to payment-related transactional needs. What we saw from the 2024 survey was that companies are sort of shifting back to their banks as opposed to fintechs for some of these new services. And I have sort of a perspective on that. I think there's many reasons why they're shifting back, because historically the banks provided the actual rails or the mechanism to initiate the payment, and some of the fintechs provided sort of the adjacent space solutions. Well, as banks have perfected the payment tools, they've sort of migrated to some of these adjacent spaces as well. But I think over the past couple of years, we've seen companies come back to banks for some of those services. And I think it's for a couple of reasons. I think, as I said, banks are doing more solutions surrounding the payment, like an integrated payable or an integrated receivable. But I also think there's some items like fraud that companies know that banks are very well versed, very staffed up, and have great systems to mitigate fraud. And as we see the prevalence of fraud in many ways, I think companies are comforted in the fact going back to their banks for some of these services. Marie, how are you seeing this this sort of trend going back to banks at MasterCard? What are you seeing?
MasterCard has always been focused on modernizing payments. I mean, we were one of the first to introduce the P card, one of the first to introduce VCN, virtual cards. And then from virtual cards, it actually evolved now to what we see as integrated payables. Everybody wants everything consolidated. And from integrated payables, now it's evolving into broader treasury services. So what we saw was that the fintechs are very, very agile. They were on the cutting edge of this. So they were providing a very comprehensive solutions around payments and these services, as you had mentioned. So we started to see a shift of corporates moving over to these fintechs. But they were always very clear with us. Their preference was to work with their bank. Their bank is their lender. Their bank is their trusted partner. You talked about security. The banks are regulated. So as much as they wanted to remain with their bank, they were being pulled by the fintechs that were providing a lot of these integrated, a robust service for them. The banks have since accelerated that and have adopted that and are now much more competitive in what they're offering. They're offering integrated payables. They're offering treasury solutions, the ability to better manage cash flow. So we're seeing this inertia kind of moving back to the banks. So it creates for a very competitive environment. So the shift is returning from what we're seeing.
Yeah, and I think after sort of the craziness that was the beginning of 2023 and the banks weathering it, I think it just makes them feel more comfortable with those trends.
Absolutely.
Tyra,
Absolutely.
Tyra, what's your perspective?
Yeah, so I would just, Mike, build off your and Marie's point. I mean, I think you're absolutely right that sort of there was this marriage, particularly heightened by the pandemic, of banks realizing that they really needed to digitize channels and processes, and that there were really strong user experiences that many fintechs had developed in particular areas that they were going to, sort of rally around and understand how that played into their own ecosystems. Gartner has a stat that banks on average have about 9.4 fintech partners per bank. And you think about what that means, right? How you start to overlay that into the ecosystem. But what the slide also points out, and I think the results of our study is that banks, because of the heightened scrutiny they have, the regulatory environment we're up against, you bring security and fraud protection as a core tenet of how you do banking. And so the best partnerships I've seen are really where you have third-party providers, fintechs that are partnering with banks to understand how do they think about risk, how do they think about compliance, how are they held to the same standards in terms of legal oversight, because that's the standard by which these partners have to be integrated, right? They have to sort of meet that standard or exceed that standard to be married into the ecosystem in which the bank is then willing, to partner and distribute it. I think also, broadly on fraud and security, what we've seen from a banking perspective is that banks are very focused on ensuring that we maximize fraud protection, but that we also optimize customer experience. And so we've seen that in areas like in the consumer side with, where there have been increases in the market, like with consumer account takeover or card not present fraud. There is a really meaningful kind of discussion that continues to happen around how do we mitigate fraud, particularly in payments. And I think a lot of that strategy is becoming much more contextualized. We're thinking about the channels in which our customers are coming in and utilizing it. We're thinking about overlay services or value add capabilities where you can use things like geolocation to understand where that payment is originating from. And so as we bring all of these capabilities together, I think banks have a really, really continued strong role to play in fraud and security. And you're going to see, you know, my view is you're going to see continued contextualization around how we think about that for the type of experience that we want to deliver to our customers.
It's the less fun part of payments, right? But it's necessary to make sure we're doing all those things to protect our clients. Matt, Tyra talked, one of the things that Tyra talked about was fraud, payments fraud. Can you talk a little bit about what's going on there and what Citizens is doing to help their customers be secure and confident as they make payments?
Yes, an evergreen topic, unfortunately, and we could do a whole webinar just on fraud. Actually, we have.
We do.
Um, but so it is definitely the bank's role to help our customers minimize their exposure to fraud. And we do that in a variety of ways. We have a whole menu of services that can be added on to payment solutions to ensure to ensure you're protecting yourself as much as you can from fraud. So Positive Pay is a simple but very effective control, both on the check paid side or the checks issued side, and also on the ACH side. Essentially, if an item is presented for payment and you did not tell us that you issued it, we will not pay it. We will instead ask you to take a look at it and let us know, is it a valid item or is it not? We've had many customers, especially accelerated by the pandemic, who have said, you know what, we need to get check writing out of our business entirely. Bank, can you do it for us? Which is both a good operational sort of business continuity control or option, but also gets check stock out of your office. So that's another vector of fraud, is having checks hanging around. And then to Marie's point about some of the fintech solutions, or some of the more integrated solutions, I should say, in terms of integrated payables, we have a partnership with a vendor called Bottomline for a product called PayModeX, which essentially creates a network of buyers and suppliers. And one of the key highlights of that, among many, but one of the key ones from a fraud perspective, is they have a network in the middle. So our customers don't have to know information about each other, like their account numbers and things that can get lost in data breaches. That's all housed by the network. So the buyers and suppliers are just interacting with the network. So it's another way to reduce fraud. So there's lots of tools out there, and the more companies take advantage of those tools, the safer that they will be.
Thanks, Matt. And I think as an industry, we don't often give ourselves enough credit on the progress we've made. So I'm the old guy on the panel here. I've been doing this 30 some odd years. And when I first started, the initiative was, hey, let's try to get checks and subsequent fraud out of the system and make the payments more electronic. Clearly, we've done that over the past 30 years, and we've introduced some really great solutions, to Matt and Tyra's point, that help us mitigate fraud for our customers. So the final section of the survey, we wanted to chat about payment digitization. This year, significantly more respondents to the survey agreed that the move to digital payments has refined their cash flow forecasting capabilities and enhanced visibility and control, while a few have said it's created challenges in their organizations. 94% of the respondents even said that they plan to fully transition away from checks in the next 5 years. Marie, any reactions to what might be driving this positive sentiment around digital payment methods?
Sure. You know, there has been a generational shift that we have seen. The millennials are moving into the C-suite. Gen Z represents 25% of the workforce today. They are the first digitally native generation. So they are demanding a consumerized experience. Consumerism is coming to Treasury. What does that mean? It's making things simple. It's digital. It's intuitive. And if you think about digitization, what does that mean? Digitized payments. That means the data is digital. If the data is digital, you have transparency, you have better reporting, You have the ability to do better analysis. Mike, you talked about cash flow management, how critical that is. That is all critical in this digital environment. You talked about checks. 60% of payment fraud happens on checks. So right away, that is something that we believe this group will be moving away from. But also, this is a very socially conscious generation, a socially conscious movement. They want to get away from paper. It's completely counterintuitive to what they believe in. So which is obviously checks aren't sustainable. So we believe in the next 1 to 2 years, there's going to be a huge shift away from paper to digitization to drive better transparency, to drive greater efficiencies. It's cost savings. So it's really this very, very strong inertia that's happening. And that's why there's such positive intent around and sentiment around payment digitization.
I think the social conscious aspect of that, Maria, is so spot on with this generation.
Yes.
Great, thank you for that. Okay, I want to move on. Just before we get to Q&A, I just want to ask each one of the panelists, what's the one thing that you think companies should consider when it comes to their payment strategy? Tyra, why don't I start with you?
Yeah, Mike, so the first one here on the left is really understanding and assessing your payment partnerships. I had the opportunity to speak about this on a panel recently, and I think what's so critical is that early on, you sort of make sure when you're entering into new partnerships and you're thinking about the needs of your core customer set, that the shared objectives and clear metrics on what you're seeking to accomplish is sort of critical to define from the outside and from the outset, and then having the right organizational and executive support to make sure that as you think about payment partnership and what it's seeking to deliver, that it materializes in the way that you've really conceived of it. And I think part of that is also being able to continually refine that model, right? As you think about what your go-to-market strategy is, as we think about the generational influence and the different ways people are thinking about digital payments, making sure that your payment partnerships are ones that stay, up to date with those norms and really deliver the return that your organization is seeking, whether that's in areas around automation, whether that's data and insights, whether that's innovation or sort of, new customers and new channels that you're aligning against. And I think across all of that, as we talk about fraud and security, just making sure that the services include the robustness of, fraud mitigation techniques and that they integrate seamlessly with internal systems. So there's a number of areas to really think about when you think holistically around your payment partnerships. But increasingly an area that we're going to see more and more of, as we talked about kind of with trends toward the space, and something that we're quite excited, certainly on the citizen side, to continue to deliver to our customers.
Tyra, you mentioned a stat earlier that companies use on average 9.4. They have 9.4 fintech partnerships. And one of the things that you've done here at Citizens is force us to think about what else our fintechs can help us do. And I think that's really, really important from a solution perspective. You think about sort of why you hired this fintech, right? The solution that you hired them for, and you rarely think about what else they can do for you. And I think that's a really good thing that you brought to the organization. Matt, what about you? What do you think that companies should do around their payment strategy?
For me, Mike, it's really evaluate the use of physical payments. And not to beat the check thing into the ground, but there is a reason that checks are so durable, in that they continue to have such a presence in the U.S. sort of B2B and B2C payment landscape. There has been a lot of innovation on the payment side of the ledger for folks making payments. There's been quite a bit of innovation and a lot of alternatives, but where there hasn't been as much innovation until relatively more recently is on the receiving side of a payment. So for every payment that's made, there's two parties. There's the payor, but there's also the payee. And for every payor who realizes some efficiency or gains some automation in their digitization journey, there might be a trading partner on the other side of that payment for whom the digitization of the payment causes pain in terms of reconciling to AR. So what excites me is that we have seen in the last few years, we've seen that start to shift, and there's starting to be as much attention paid to the receiving side of the payment as there is on the origination side of the payment. And I think that's great news for everybody who's involved on the receiving side of the payment. And it will hopefully, as customers, as trading partners get more and more comfortable with accepting electronic or digitized forms of payments because they no longer have the reconciliation headache, it will just speed up overall digitization adoption and lead to checks continuing to decline and maybe declining at a faster rate. So, and if you're one of those companies that is feeling the pain of digitized payments from an AR perspective, there's definitely help available, and that there's ways to use technology to improve that experience.
And Matt, we can be on both sides, right? We can do the payment
Absolutely.
speed and the receivables piece. So
For our companies who have worked with us to automate their receivables, they have Life-Changing is strong, but it's been a very positive experience for those companies.
Marie, how about you yourself and what's going on at MasterCard?
Yeah. So what it says here is stay agile and adapt. This is not a message to the fintechs. This is what they do. But we need to learn from them. It is really about keeping your finger on the pulse. The digital landscape is changing. We're talking about digitization. So, technology is is constantly evolving. The regulatory environment is constantly changing. So for you, keeping your finger on the pulse, understanding the implications of these changes, what the opportunities are of these changes, because it's really about optimizing your payment strategy, your cash flow management. AI is very, very real, and it's happening. And the ability to leverage AI in these business processes is critical. So it is really, your banking relationships are trusted partners, as you have heard, Tyra, constantly evaluating the fintech partnerships that they're aligning with, because they're constantly upgrading and providing more comprehensive services. So I would say, my advice is to really just stay in touch, stay close to it, understand your business, and understand how technologies and the evolving landscape is going to help you be much more effective in your business.
Great, thanks, Marie. And I'm surprised. I am really surprised that was the first time that AI has come up, right? Because I know, we're doing a bunch of things at Citizens behind the scenes with AI in a number of different areas. So we need to make sure our marketing people and Tyra and Matt put into next year's survey some really pointed questions about AI, because I think from 24 to 25, there's going to be a marked difference in where our customers are in terms of using AI.
Absolutely.
So with that, I just wanted to let everybody know that this is the microsite for both the presentation and also the results of our payment trends survey. You can access that. So if you want to quickly copy that down, you'll be able to access all of the information that was discussed here today. And I think I'm going to turn it over to Brandy to manage the Q&A process. I saw a couple of questions come in.
Yes, thank you so much. And if you'd like to enter a question, please do so in the chat. We have a question that came in And I know we talked about this a little bit, but someone asked, is the understanding that banks are stronger when it comes to wholesale payments, but are ceding space to technology-based competitors on retail and cross-border payments true? If yes, how does how does Citizens plan to address this?
So
Tyra,
I can take a stab at that, and then others feel free to weigh in. I think there is that perception, right? We talked about the consumerization of payments, and fintechs definitely sort of got an early start on that. I think as we've talked about throughout this presentation, banks have really upped our game in terms of offering some of these experiences that we know that our customers like, and embedding them in a typical bank process. On the commercial side or the wholesale payment side, I would tend to agree that that banks have typically been viewed as stronger. But as I hope people got from this conversation, we know that the consumerization expectations are moving up from consumer to business banking to commercial corporate wholesale, and we need to continue to evolve on that, because what the users, what individuals, what people experience in their day-to-day life, they take to work with them, and those expectations are there. So I think that will continue to be a very important trend.
Matt, I might just add to that. I do think there's this perception in terms of wholesale versus consumer, but I see increasingly that those walls are coming down, so to speak, because when you think about customer segments, Citizens put a lot of focus, for example, into small business, and really the way we've thought about small businesses as a one-stop shop where you can be a sole proprietor that operates on our consumer online banking platform, but you have needs as a business owner as well. And so we think increasingly of how do we serve that full set. And in many cases, that can be through partnerships that really augment the solutions and capabilities. In the broader market, when you think about cross-border, we've seen players such as Wise that do cross-border remittance increasingly partner with banks to sort of optimize distribution. So I think all of these trends are sort of at this point of convergence, of inflection. And I think it ties back to many of the points in the presentation. And as Marie said, being agile, being adaptable, and really thinking about sort of how do you hone those use cases or those areas that are most important to you as an organization, to customers that you serve, and look for ways to optimize and innovate around them.
Marie.
We do have, oh, sorry. Did you want to go ahead and?
Well, I just wanted to see if Marie had anything to add, but I would add to what Matt and Tyra said. Banks have been doing this for a really long time, right? From a payments perspective, we've been in this space for a long time, and I think we look at fintechs as sort of augmenting our capabilities, but the payments will always go through the bank. And sometimes we partner, sometimes we build. But I think it's the banks are the ones that have the history and the experience around payments.
Great. And we do have one more question. Can you talk about the cost of instant payments like RFP and FedNow, and when will all banks have these options?
Matt, do you want to?
From a cost perspective, the RTP and FedNow are going to slot in between Wire and ACH in terms of cost, but much closer to ACH than Wire. So that sort of $35 per payment price point, it will be a thing of the past with RTP and FedNow. So I think there's a lot of benefit there. The one thing to keep in mind with RTP and FedNow is that they do have transaction limits because they are still relatively new. With RTP, there's a transaction limit of $1 million per payment, which has gone up over the 6 years that RTP has been available. FedNow is a little bit earlier in their maturity, so theirs is lower. They set it at 100,000 for a default, but each individual bank that signs up for FedNow can move it up to as much as 500,000. We expect that those limits will continue to grow as these payment types become more more available and more understood and more utilized. Now, in terms of when will they be ubiquitous? When will you be able to get to any bank in the country? As I mentioned earlier, there is no mandate in the US that banks must sign up for one or the other or both. So right now it's on a voluntary basis. As we can see with the RTP reach, that RTP can reach almost 70% of checking accounts in the United States. You can see that banks see a lot of value in it. When will it be completely ubiquitous? We might not ever get there, but I think the ability to reach banks where you are likely to have a trading partner is already pretty realistic with RTP and will only continue to grow.
Great, thanks, Matt. And I'll hand it back to you, Mike, to close us out.
Is there any more questions, Brandy? Happy to answer them. No more questions?
I think we have all the questions that we are able to get to today, but we'll definitely follow up with anything we couldn't get to.
Perfect. Again, I wanted to thank everybody for joining us today. Hopefully we helped a little bit in your understanding of the survey, but also payments in general. And again, we're always available to meet or discuss any topics around payments. I want to thank the panel. It's not only great working with them on a day-to-day basis, it's also fun to do these kind of forums as well. But thank you, and hope everybody has a great afternoon. And scan the QR code and do the survey, please, so we know how to get better for next time.
Thank you all for joining. This concludes our call. You may now disconnect.